So again, today's topic is going to be income taxes and qualifying for a mortgage. Okay, as we present ourselves, my name is Porfirio Coronado, and then I have Miss Andrea Love as well. Okay, so the purpose of today is to discuss what every home buyer should know before they even file their taxes, especially whenever they're trying to purchase a house, because that will affect your purchasing power. Okay, so that is the purpose of today's webinar. Okay, now some basic information that you need to be aware of. Okay, so and this information is your tax return. Okay, so your tax return, it's your actual 1040. So when a lender asks you like, hey, will you please send me your tax returns, they're asking for the 1040. Okay, of course, there's also W-2, which is the form that you receive from your employer if you are full-time, part-time, and you get paid by check. Okay, and where they take out taxes. Okay, now your W-4 is your form that you filled out when you first start working for that employer. Okay, now a lot of you all might also be receiving a 1099 of some sort. There's a 1099 miscellaneous, which is a contractor and also just miscellaneous work. You might also be receiving a 1099K for third-party transactions. Okay, and that is if you are selling items online like Etsy or through Zelle, through Cash App. Okay, you might also be receiving a 1099G, which is a government payment. That is if you were claiming unemployment. Okay, now most common schedules that you will be hearing, it's going to be a Schedule A, which is an itemized deduction, is where you put all your expenses if you will be itemizing, and then B, which is your interest and dividends. And of course, a Schedule C is if you're self-employed. Now, you will also probably be receiving a letter of 6419, which is only applicable if you received your child tax credit in advance, but that's only for 2021. Okay, for 2022, this does not apply, but I wanted to leave it in here just because, again, if you're filing for 2021 as well. Andre, would you please touch base on that as well?
Yes. So letter 6419 is for the advanced child tax credit. If you receive those payments in 2021, you would need to file that. One other form that I do want to go back on is that W-4. That's very important. I get clients every day who do not have their W-4s filled out correctly. So you fill out your W-4 with your HR department. And typically, if it's just you're a single adult and you have no dependents, you would file 0 or 1. Now, if you have dependents, you would file yourself plus that dependent. So that's where you could file 2. A lot of people are incorrectly filling out their W-4s and they're claiming exempt, meaning you're not taking out any federal tax withholdings. So you will owe taxes to the government at the end of the year. Or if you're claiming 5 or 6 exemptions and it's only yourself and 1 dependent, you're taking out way less taxes than what you are actually supposed to be taking out. So you're going to owe. And this happens every year, and a lot of taxpayers, they just don't know. They're filling it out incorrectly. I just had someone, they weren't taking out any Social Security. So just imagine if you're not taking out any Social Security when you get of age to collect SSI, you wouldn't be able to because you weren't putting any money into it. So just really be sure you're filling out your W-4 correctly. If you need to speak with a tax professional about how to properly fill out a W-4, I'm available. You can also get on YouTube University and maybe get some information there as well. That's all I have, Porfirio.
All right, thank you. Yes, like Andrea said, filling out your W-4 correctly, it's going to save you a lot of headaches, especially at the end of the year where you're going to be filing taxes. So if you don't know how to fill out your W-4, like Andrea said, talk to a tax professional. You can also talk to your homeownership counselor, and also, you can YouTube it or Google it so that you can file it correctly. Okay. So how to file? Okay. So if you received a W-2, meaning that just the little form that the employer sends to you by mail, or they might hand deliver to you, but it has the W-2 at the very top. Okay, and it's going to say W-2 with the tax year, right? For example, for this year, 2023, you will receive a W-2 for 2022. Okay, now you should receive this by the end of January 31st. Okay, so by today, most of the employers should have already sent it. Okay, now with the weather and a couple of other things going on, there might be a slight delay. Okay, just note on that if you have multiple jobs, okay, if you have more than one job, you will receive more than one W-2. So you must wait for all of your W-2s before you file your taxes. Okay. You will report those W-2s on your 1040, which is, again, your tax return. And writing off against your income reduces the overall household income. And we'll touch that based on that towards some examples that we have. Now, what if I don't receive a W-2? Then at that time, you're probably going to be receiving a 1099, okay, of some sort, right? You might be self-employed, or you just might have cash income, right? So then you must report your income on a 1040. Again, that is your tax return, using a Schedule C. It's a profit and loss. Andrea?
Yeah, everything he's defined here is really standard. Reporting your income is very important because some individuals receive a 1099, meaning you're a contractor of some sort of company. And then the new thing here with our people that are involved in maybe ride sharing or like Amazon Flex and things of that sort, just really keeping track of, if you do 3 of them, if you do Lyft, Uber, and Amazon Flex, making sure that you get all of those forms and not filing without one of those forms. So let's say you only made $600 with Uber, but with Lyft, you made 35,000, and with Amazon Flex, you maybe made 14,000. All 3 of those forms still need to be reported. Regardless, because any income that you make has to be reported to the IRS. Even if it's not as much, it risks you getting an audit. So if you only made maybe $300 with Uber, you worked there, you did 1 day of work, it still needs to be reported if they send you that form out.
Thank you.
And when it comes to the Schedule C, I think it's really important as well for individuals who track their money on their own, making sure that your income that you receive into that business bank account that you're reporting the business income from is consistent. Because most lenders want to see that you have consistent income. So they're going to want to see 2 years of consistent income. And if your money that's going into that business bank account, maybe 1 month you made $1,000, and then the next month you made 0, and then the next month you made 500. We just need to show consistent income that you have the ability to pay on a mortgage.
Thank you, Andrea.
You're welcome.
All right, so what defines as a self-employment? Okay, so just because you don't own your own business, you probably think like, oh, I'm not considered self-employed, but in fact, you are. Okay, 30% of the workforce is considered self-employed according to the IRS. Now, this number might have changed due to COVID because, with COVID, we all found out that, we could do Instacart, we could do Amazon Flex, we could do Uber, right? So as a side hustle. So if you receive income through any of the following ways, you may be considered self-employed. Okay, so having a side hustle, again, going through Uber, Instacart, maybe you're participating in the gig economy. Working as a contractor, that that is a or a consultant. Now that is probably the main one that most of what you are, if you are self-employed, that's probably what you are, a contractor or some sort of consultant. Maybe you own your own business, okay? If you do hair, nails, anything like that, then you're considered self-employed. Andrea?
The only thing I would elaborate to this is kind of going back to what I was just stating. You know, if you receive income through any of the following ways and you're not, you're maybe doing multiple things, because we run into this a lot. You know, a lot of us have multiple gigs because that's how we make ends meet. But you really need to make sure you have one sole source of income when you're looking to purchase a mortgage, because the lender wants to see a consistent income. And the lender can't actually advise you of how much income you need to report. They're just going to ask you, are you a contractor? Are you a consultant? What source of income are you going to be providing us to show the ability to pay for this mortgage? So really just be specific. You know, maybe you make the most money doing Uber or DoorDash, or working as a contractor installing flooring, then that's the source of income that you really need to report. And anything else is just a side source of income.
Thank you. And just to test you all, so what do we say that if you were a self-employed, what type of schedule will you use? That's a test.
Yeah, I like that.
Anyone? There you go, Miss Tamika, she's listening. That she says 1099. That is correct. You will receive a 1099, which is yes. So that's the form that you will receive, and you'll file it on your 1040. Okay. Schedule C.
That's great.
All right. What qualifies as a side hustle and gig? Okay. Some examples, like I was mentioning earlier, you're probably independent contractor or consultant. A freelancer, maybe you're a photographer, graphic designer, especially if you charge per design, or instead of per hour. Temp or seasonal work, a lot of temp agencies, because they don't want to pay benefits, they would give you a 1099, where they don't take out taxes. Driving for a rideshare, such as Uber, Lyft. I was going to mention the other one, I forgot about it, the name. Maybe you have a delivery services, such as Amazon, Instacart, DoorDash, etc. And then also, maybe if you are doing cosmetic things, if you're like hairstylist, nail and lash technicians, some kind of you're a painter, you're a flooring person that does flooring for for your as a business. All of that will qualify as a side hustle or gig. Okay, Andrea?
You mentioned earlier too, a really good one, people that sell on like Etsy, like you make products, maybe candles or crafts, and you sell them on Etsy, or you have a Shopify store and you buy products wholesale and resell them online. All of that is considered, a side hustle or gig. So really making sure that you're reporting that income is important.
Yeah. All right. So now let's talk about loan affordability if you were to be self-employed. Okay, if you were to have some kind of gig work. Okay, and like Andrea mentioned earlier, whenever you are, if self-employment is your primary income, there is a specific way that you need to file your taxes so that you are able to afford the most loan amount. Okay, now if your self-employment is just like a side hustle or gig, then you also have to pay attention because that would affect your overall income. Okay, so the loan affordability with self-employment. Okay, how long have you been doing this work? Okay, so you have to ask yourself, how long have you been doing this work? Most lenders will require you that you file or that you're doing this work for the last 2 years. Okay. Now you have to ask, do you report this income on your taxes? Okay. Now, if you're going to be using it to qualify for a mortgage, the lender is going to require you that you report it on your taxes. Again, that is the only way that they're validating that what you're telling them that you have as income, it is actually true, right? And the only way that they can verify that is if you file on your taxes. If so, you have to declare it as a business income and a business loss. Okay, take note on that too, those two, business income and business loss, because that will affect your overall income. Now, calculating your annual income. Okay, whenever you go to a lender and you're self-employed, or your co-borrower is self-employed, or anyone in the application for the loan is self-employed, this is how the lenders are going to do it. They're going to typically take the average of the last 2 years of your taxable income, okay, which is your total income minus qualified adjustments. This is called your adjusted gross income, okay, AGI. And you will hear your lender or your loan officer tell you, mention that to you. It's like, okay, what is your AGI? What is your adjusted gross income for 2021 and 2022? Okay, so keep that in mind. Andrea, anything?
I would say here, when it's saying your lender typically takes the 2-year average of your total taxable income, it's really important because in 2020, 2021, of course, we were going through a pandemic and income was a lot less than it probably had been in 2019. So really make sure that the income that you're going to report as a self-employed individual for 2022, before you all file your taxes, is accurate. Because if you report less income in 2022 as well, your 2-year average is not going to be there to possibly get you to qualify for the type of home that you want. So really just make sure that you report your income this upcoming season so that you can qualify for that home when it comes to your this 2-year average.
So deductions and write-offs. Okay, so what you should know about this is that these are self-employed. Often those that are self-employed often take this advantage as a tax deduction or write-offs that is allowed by the IRS. Okay, so the IRS allows anything that is necessary and ordinary for your business or the type of work that you do as a write-off. Now, deductions reduce the amount of income you owe taxes on, which is why most people that are self-employed write stuff off, because it reduces the amount of taxable income. However, the amount that of taxable income is your adjusted gross income that is going to be shown on your 1040. And again, this is what lenders are going to use to analyze how much loan are you able to qualify for. This holds true only for if you have a primary employment as a side hustle or gig. Okay, so we'll look at it in an example as well. But you'd like to add anything to it, Andrea?
Yeah, no, the deductions and write-offs are really standard. However, there's one little thing that a lot of people that they miss. Some deductions and write-offs can be rolled back in with certain lenders. So you mentioned that if it's ordinary and necessary for the line of business that you do. So if you do Uber, or if you operate in transportation and logistics, and you typically drive a lot of mileage, or you need to depreciate your vehicle, those can be rolled back in because that's something that's ordinary and necessary for you to do business. And it's not for everybody. It just depends on the actual line of business you're in. And it depends on your lender as well, if they're willing to roll back in those deductions.
That is correct. That's a high point right there, right? It's that only some lenders are able to add that write-off back to your income. And we'll see why is that's important. So if you look at here, this is an example of a 1040. Okay, this is an example of your tax return, perhaps. Okay, what I really want you to pay attention, it's pay attention to line 8, which is other income. That's where you would that's where the self-employment or side gig, or if you were a contractor, whatever income that you put on the Schedule C, that would be on line 8. Okay, that plus any other income that you have already declared in your 1040, all total will be on line 9. Okay. After any adjustments, then it's going to be your adjusted gross income. Okay. Now, let's look at a quick story. Okay. On this story, this is John's story. Okay. John's partner works part-time as a medical assistant. Okay. John's partner is paid hourly by his employer and receives a W-2 each year. On the other hand, John began driving for Uber Eats in his free time to generate extra income. He filed his income taxes from his job on his tax returns. Okay. Now in 2022, John's partner earned $23,500 from the part-time job. Okay. While John earned $45,300 from the side hustle, which again, Uber. When filing his taxes, John and his tax professional decided to declare that $45,300 income from the Uber without any deductions, okay, or expenses. So we're going to look at how that affects the way that he qualifies. Okay, so if you see here, this is a Schedule C. Okay, this is where the 1099 that John received from his Uber. Okay, if you see here's $45,300 as gross receipts. And if you see on line 28, it says total expenses 0, and then line 29 says tentative profit, and that tentative profit is 45,300. Okay, so that is what's going to go on the 1040. Okay, so question for you all. What income would a lender calculate for John's affordability based on this example? Anyone? Dion said AGI. Yes, that's correct. What's the AGI? Yes, 68,800. Okay, that is the that is the adjusted gross income that the lender will use to pre-qualify you for a loan. Okay, so how does that look? If John earns 68,000, the household altogether earns 68,800, and if we're saying that you are able to afford 3 times your income towards a mortgage, then what is the approximately amount of loan that you're able to qualify for? Anyone? Yeah, I didn't know y'all were gonna come to a math class, huh? Also, y'all verify my math, because sometimes it's not correct. Even though I did a major in accounting, don't hold me to that. Kiana said 204. It's 206, 400. Okay, yeah, Esteban, yeah. So if we're saying that you are able to qualify 3 times your adjusted gross income, then your lender might qualify for like $206,000. Okay. Anything you'd like to add, Andrea?
No, this is great. I love the example.
Okay. All right. Now, let's look at it the other way. Okay. What if you had a business loss or some kind of deductions? Okay. So again, we have the same story. John and his partner, they both earned 2,300, 500 for one, 23,500 for one. And then John earns 45,300. Okay. So it's the same example. Now, the only difference is that John decided to take expenses, right? He decided to write some items off, right? The total expenses that he wrote off were 29,300. Okay, so how does that affect his affordability or their affordability as a household? So again, if we look at a Schedule C, 45,300, it's what John received from Uber, right? But he decided that he was going to write off car and truck expenses of 25,000. He also wrote off $800 of supplies, plus $3,500 of other expenses, that he put in there. Okay, so all of that totals to be 29,300. Okay, but the income or profit that he will have now is going to be $16,000. Right? So what does that mean? That means that the lender, instead of using 45,300 for this side hustle or work, they're only going to use $16,000. Okay, so let's look at how it looks on your 1040. Okay, so if you see here on line 1, 23,500, that is from medical assistant for his partner. And then if you go down to line 8, other income, that is where John's income for his business or his side hustle, which is Uber, it's $16,000. Okay, so in this case, what income would the lender use to calculate his affordability or therefore affordability for a house? Anyone? Tamika, 39,500. That is correct. They will use 39,500. Okay, which is the adjusted gross income. Now, if we say that you are able to qualify for a loan 3 times your adjusted gross income, how much would they qualify for now? There you go. Love how y'all paying attention.
Yeah, they are on it.
All right, so yes. So now you see that because the adjusted gross income is less now, they are potentially will be able to qualify for much less now, which is $118,000 house or loan. Okay. So yes, anything you'd like to add, Andrea?
Yeah, I would just say this, when you look at these numbers, it's discouraging because it's like, wow, I made all of this money, but I decided to take these write-offs. And now, I could have gotten maybe like a $200,000, $300,000 home, but now I only qualify for almost half of that. So I think, for the entrepreneurs out there, don't move this way when you want to purchase. really talk with a professional that can help you and say, this is the proper scenario for you. Go ahead and report your income, maybe not take as many write-offs so that you can qualify to purchase. And next year, you can go in and take the write-offs that you need, but and reduce your tax liability. But right now, if your true desire is to be a homeowner, there's sacrifices that you have to make. And as a self-employed individual, you're actually supposed to be paying your taxes throughout the year quarterly. If you get with a tax professional that can teach you how to tax plan, and maybe you're taking out pieces of money throughout the year and putting it in an account so that you can pay those taxes, this will reduce your tax liability as well. So it's just, I know that looking at this can be discouraging, but you have to kind of think too, what sacrifice do I want to ultimately obtain generational wealth?
That is correct. That's a good point. Generational wealth. And Ms. Charm said, she seconds that discouragement. And again, and it's not, we don't want you to feel discouraged in any way, but it can be, but which is why you need to speak to a tax professional. And also you need to be honest and let them know, like, hey, I'm trying to purchase a house. And I know that in order for me to purchase a house, I need to show the most income that I have, that I'm actually receiving, right? And remember, you only have to do it for that year or 2 years that you are in the process of buying a house. After you purchase a house, don't tell them I said this, and I'm being recorded too. So you can take out any deductions after that, as long as they are necessary and ordinary for your business. But again, whenever you're in the home buying process, you want to show the lender that you are able to purchase or pay the mortgage that you're asking for. Okay. And one other thing that I want to touch base on this in here is that the $25,000 that we saw here on the car expenses, that is what Audria was mentioning, that some lenders will add this $25,000 to the $16,000. Okay, but not all. Okay, which is why you need to speak to a lender to see how do they consider self-employment. Okay. Okay, so be mindful. Now, if you use Zelle transactions, Cash App, Venmo, a lot of times you're going to receive a 1099-K. Okay. Also, if you sell items through online, through Etsy or anything like that. Now, with the new law that was passed, any income that you received from a sale or a transaction that is more than $600, you will have to report it to your taxes. Okay, it has to be income, not peer-to-peer. Okay, it can't be like I sent $500 to Andrea for reimbursement on something, right? It has to be that I purchased something from Andrea and I'm paying her the $500. So then Andrea will have to report that as income. Okay, so a lot of people get confused on that, and they started going away from using this type of platforms or apps, because they were thinking that any little transaction that they make, they will have to pay taxes. And that's not true. That's only if you are is some type of business. Okay. And like I mentioned to you earlier, you probably receive a 6419, which is a letter for your advanced child tax credit. Okay. Anything you would like to add to that, Andrea?
Yeah, the portion with the Zelle, Cash App, and Venmo, I recommend truly to stay away from those sources, because it's still kind of hard, because you kind of can forget. Okay, this person, that they send me this payment, that they didn't put in the notes that this was this payment for a business transaction, or were they just sending me money for coffee? So just really be careful on how you manage your money. Lenders want to see consistent stable income. So just imagine if every time you get a draw into your account, if it's always different amounts, it's $50, it's $20, it's 100, then it's 500, it's 1,000. The lender is looking at that, and when you go into underwriting, that can kind of raise red flags. So really be cautious if you are sending cash apps for friends and family. Maybe that goes into a separate account. And when you're conducting business, true and actual business, it goes into a business account. I think it's really important that you differentiate, because underwriting, they're not going to be lenient. They're going to put conditions on your loan. And especially when transactions are over $1,000, they're going to want explanations for each transaction that's over $1,000. If you are, having several of those, that could potentially get your loan denied. So I just tell clients all the time, make sure you have a business account that you operate out of operate business transactions out of.
That is true. And what Andrea's talking about, it's the underwriting process. Whenever you hit the underwriting process, they are going to question everything and anything on your bank statements. Okay, even if you have big expenses, right? Like that, they see that every 2 weeks you send $300 to Andrea, or every 2 weeks you send $500 to your parents, right? They're going to question, like, okay, is this a loan that you're paying back, right? Because if it is, then that's debt, right? So you have to be mindful how you treat your expenses on while you're in the home buying process. Real quick, on another thing that I want to touch base on, the 1099K. Okay, on the 1099K, let's say for instance that you received the 1099K from Cash App, right? And you know that all those transactions were made for peer-to-peer, like friends to friends and family. It was not a business transaction. You can contact them directly so that they can fix that, okay, and get it corrected. Now, if you're not able to get it corrected, then you will file it on your taxes, okay? However, you have to tell your tax preparer, hey, this is not correct, so that they can note it on your taxes that, that money was not business. That way you're not taxed on it. But don't, just because it's not correct, don't feel like you don't have to file it, because again, all your W-2s, all your forms that you receive, W-2s, 1099s, anything that you receive, a copy sent to the IRS, right? So whenever the system starts, calculating your income for what you're reporting, if they see that you didn't report that, then that's going to delay your refund, okay? And perhaps open a can of worms for an audit, okay? So even if you receive it, go ahead and file it, and just tell your tax preparer that it was a non-business transaction, okay? All right, make a plan for your tax refund, okay? Do you want to go ahead and go through this one, Andrea?
Yes, I can definitely do that. This is really, kind of true and tried. Typically, when people get their tax refund, we're coming off of the holiday season, so you spent a lot of money on gifts and, food and just entertaining. But really being strategic with what you do with that tax refund is so important. I believe everybody that's on the call today, you all are interested in purchasing a home. So let's say you get a $10,000 refund. What would you do with that $10,000 refund? The most beneficial thing to do would be to either put that refund back into some type of investment strategy, like a savings account, until you're ready to purchase, so that it can draw interest on it, or you're just putting that money up so that you can put it towards your down payment on your home. We just, in these days and times, I know instant gratification is so great. It's like, oh, I needed this money, now it's in my hand, and now I can go pay X, Y, and Z. I can go shopping or do that. But just being really smart about how you manage your money, it can change your life. I mean, tax refunds used to be a thing where everyone was like, oh, I just need this refund so I can, get back on my feet, that extra chunk of money. But when you really think about it, if you spend that so quickly, you're missing out on that one step closer to obtaining generational wealth. So, he's put on here, having a cash flow budget. If you do have some expenses and things that you need to manage, maybe put half of it towards that instead of the whole entire refund. And then, repaying your debt is so important because your lender may come to you with conditions and say, well, we see this credit card on your credit, it's maxed out. It's at a, $5,000 balance, and you need to probably bring that down. So maybe put $2,000 towards paying down that balance so that your debt ratio isn't so high when it comes to closing on a loan. So I think it's really important this tax season. I want everyone to maybe go into that mindset that I want more for myself. I want to truly take this tax refund and invest it in myself versus, spending it on things that are not going to be tangible or sustainable over time. So that's just a bit of info from me. And I hope that you all take that with just what it is, truth, and hopefully you can use it for your betterment.
Yes, Andre made a huge point in there. A lot of times when people receive tax refunds, they automatically want to use the whole tax refund to pay down debt or, to pay collection accounts, right? But like Andre mentioned, is like, why don't you use part of that towards that and use the other ones as savings, right? A lot of times what holds clients or you all from being able to purchase a house, it's the lack of savings, right? So if tax season is the only year that we're able to do that, then we would do that. Not sure if
Yeah.
I'm frozen. Okay, I'm back.
Yeah, I agree. Someone said that is my plan with my refund is to pay down most of my debt. So consider that. Should you pay the entire debt down? Is that going to affect your debt to income ratio? Is it something that you can maybe put money to aside and make payments on? Just think about it, in a rational way so that you don't deplete yourself of those funds.
Not sure what. Okay, there you go.
Yeah. Did the next slide come up? Okay, there it is.
I had to turn off my camera because I think I'm losing signal here.
Oh, okay.
You want to take over that one real quick?
Absolutely. So some key takeaways. Definitely majority of our economy is considered self-employed. But a lot of you all maybe just don't know or identify as self-employed. So really kind of the insight that was given today was to kind of let you know you may be an actual self-employed individual. Make sure you review your taxes before you sign them. If you are definitely trying to purchase a home and you went through and your tax preparer, they took all those write-offs for you, and they're like, oh, you're getting a really good refund this year. But you look at your AGI and it's like super low. You made 75,000, but your AGI is showing 39,000. Hey, hold on. I don't think I can do this because I'm trying to buy a house this year. So if you review your taxes with your preparer, you're going to be able to have a better understanding of what actually, you can qualify for and what you need to, changes you need to make. And I'm sure your tax preparer will be willing to, make those changes for you. And if you do catch anything inaccurate on your return, you can always file an amend. So let's say for 2021, you took a loss. Maybe go back and look at that tax return and see with a professional and see what areas you could have maybe reduced some of those write-offs and roll that income back in there and amend those tax returns. A lot of people are scared to amend, but it's a really good tool, because if you want to qualify for a home, just go ahead and amend like right now in this season. And maybe it takes about 12 to 16 weeks for an amendment to process. And then you be ready to purchase towards, end of summer, once you go back and show the necessary income to qualify. And then he has in here, income isn't everything when qualifying for a mortgage. Your credit score, history, and savings are factored in too. So I also am a credit counselor, and it's very important. Your credit is key. If you are, maxed out credit cards, you have several collections and medical bills, focus on getting those corrected now so that you can qualify. Lenders do not like to see collections on your credit or maxed out credit cards or late payments. So let's say in December, you were late on a car note. You were late on your credit card payment. Get those late payments corrected. Call those companies and see if they'll remove the late with like a goodwill letter. And if not, then you maybe need to consider credit repair or credit counseling so that you can get those things off of your credit, because it can definitely hinder you from getting an approval. I think we're going to go into some questions next.
Before we go to any questions, I just wanted to mention some resources, right? If you're in doubt, contact your homeownership counselor. So if you're working with Dallas Area Habitat, contact us. You could also visit Volunteer Income Tax Assistance Program, which is VITA for short. And like Andrea mentioned, she is certified by the IRS through this program, okay? And then also we have PocketWise Cafe. If we will drop the link on the chat for those that are not in the counseling program and don't know what that is. It is self-guided modules related to different financial topics. So we will drop that in the chat in just a second. And again, Audra works for Express Tax and Financial Services. And we're going to go ahead and share her screen so that she can share us more information about VITA and who qualifies for that.
Okay, 1 second here.
And then I would drop in the PocketWise.
Okay, 1 moment and I'll be able to share my.
Oh, there you go. So if you see there in there, that is the PocketWise link. And again, that is self-guided modules with topics about mortgage calculation, like what qualifies you for a mortgage or how much can you potentially qualify for. And then it also talks about saving, so if you haven't done any of those modules, I definitely encourage that. If you have anyone that is working, like if you have kids that are working, I would also encourage them to complete those modules so they can learn about financial topics.
Okay, I'm going to share my screen.
While Andrea is sharing her screen, if you have any questions, feel free to drop them in the chat and then or in the Q&A, and we will answer those questions.
Okay, so I'm going to just share here what the VITA program is. It's a volunteer income tax assistance program available for tax filers who make less than $68,000 a year, and for the elderly that are older than 65. So we are able to assist you with preparing your tax returns. We have different methods of preparation. I'm located at the Bill J. Pre-Center, which is in South Dallas. I'm going to put a flyer up at the end, and you all can reach out to us. But I do want to share just what the program is. So what you do is you come in, you meet with a volunteer. I'm a certified tax preparer, but within my nonprofit LEAF, which is called Learning Everything About Finances, we have volunteers who come in and assist you with filing your taxes. So these individuals have been trained and certified by the IRS, and they can file for you in person via our traditional VITA method, where they'll sit down with you one-on-one and file a tax return with you. You can also have your taxes filed virtually. So just like this call right now via Zoom, you can get on with a Zoom with a volunteer. They'll go over all of your documents for you securely, and you'll upload things on like DocuSign and DocuShare to make sure everything's secure, but you will meet with them face to face via Zoom instead of coming in person so that you can file your taxes. And then we also have, I don't offer the facilitated self-assistance return where we're assisting you file, we just file it for you. Our other option is to drop off, where the taxpayer would leave their document with the volunteer, and that tax return is prepared in your absence, and then you can return and pick up your document and sign for it, review it and sign for it, and then you will go on and get your tax refund if you are due a refund. So this is just a great program. I'm going to drop this flyer. I believe I can drop the flyer in the chat, and you all can take a look at the flyer and maybe screenshot it on your phone or something like that, so that you could reach out to us if you're in need of free tax preparation assistance. We would definitely love to assist you and be of service to you, and kind of just share, more information on VITA and how we can help you to make sure you're filing your taxes properly to qualify for a home.
Thank you, Andrea. Will you be able to share the screen for the flyer? I believe that they have to download it and save it.
Oh, okay. Let me see here. I can definitely do that.
And for those that are using a computer, make sure that you download it and save it. And if you're using your phone, you can probably there you go.
So this is the flyer. Basically, it explains everything that you need to file with us. Of course, you're going to need your photo ID, your social security card. If you have dependents listed, you'll need their socials, their date of birth, any W-2s, 1099s, tuition statements. We like all of our tax filers to bring in a copy of their last year return. That way we can look at it and compare. And then even looking at 2021, if you need to file an amendment, we would have that return right there available to assist you with an amendment as well.
Okay.
And you can take down our number and our phone number here if you need to reach out to us to schedule an appointment for VITA.
Thank you. And what was that address again, Andrea, if you don't mind typing that on the chat?
Yes, I can type the address to our office here in the chat. We do have specific hours and we're appointment only. So if you do want to come in, you would definitely need to make an appointment. I'm going to type the address here in the chat for you all. Oh, I'm sorry. Did it a little too fast. Okay.
All right, there you have it. It's BJ Priest, which is on the 1402 Corinth Street, Suite 138 in Dallas, Texas, 75215 zip code. And that is the location that Andrea is based off on. Okay, but like she said, if you would be, like those free services, make sure that you make an appointment so that they can assist you. Let's see. One question that that someone had is regarding the income limit for VITA.
The income limit is $68,000.
Okay. So the income limit for VITA, like she mentioned, is $68,000. If you make slightly over that income limit, are you still able to assist them, or how does that work?
No, unfortunately, not for free services. We aren't. If it's over the threshold, it would have to be referred to a paid preparer.
Okay, thank you.
Oh, okay. And then someone asked, is there a fee for those who don't qualify for free services? Yes, that would be, we can refer you out to a partner that does not, that charges for services. It's just based on your forms that you file.
All right, what other questions do you have?
Oh, they said they don't see the info in the chat.
I would drop it.
Thank you.
There you go. All right, that is the information there. Okay. What other questions do you have regarding the information that we went over? Did we do that good?
Yeah, I guess that you don't have any questions. If you all, you know, come up with something, you know, we can definitely stick around for a few more minutes.
For sure, for sure. Hey, Miss Sharon. But yes, again, thank you so much for joining us today. This topic was income tax and qualifying for a mortgage. You know, we focused a lot in self-employment because that affects a lot on when qualifying for a mortgage. So we wanted to make sure that we do this webinar, you know, to inform you before you file your taxes. Okay. Even if you are not self-employed, you know, even if you're not self-employed, let's, you know, whenever you go to your tax preparer, you know, especially someone that you pay, a lot of times your tax preparer would tell you, you know, do you want me to get you as much refund as possible, right? And they are able to do that a lot of times by writing stuff off, right? Even if you don't have a business, they will put a business in there so that they can write, you know, deductions off so that your taxable income is less, right? So again, you're the one signing that tax return. So what does that mean? That means that you're going to be basically saying that that is true, right? That the information that you're filing is correct. So in the case of an audit, you know, who are they going to come back? They're going to come back at the tax preparer, right? Not the tax preparer, is the taxpayer. So because you're the one that actually signed that that information was correct and accurate. Especially when you're buying a house, like we mentioned earlier, you know, you want to show that you have the most income as possible, okay? Because again, you're going to be taking out the largest, you know, loan that you would probably take out in your life, right? And you want to show that you're able to pay for it, okay? Let's see.
We have a question come up. It said, if I am not self-employed, does the 2-year AGI average still apply? And then he also asked, if he's not self-employed, does he qualify for VITA? As long as you meet the income guidelines, being under 68,000 for the year, yes, you qualify for VITA. And where did the question go? Oh, I'm sorry. And then the other question was, it just went away. You said, does the 2-year AGI average still apply? If you're W-2, it depends on the lender, right? You know, Porfirio could probably answer that more. It
Yes.
depends on the lender that you're going through.
Yes, we're sharing. That's how they get $10,000 back, writing stuff off. But
Right.
to Esteban's question, whenever you're applying for a loan, your lender will still look at your tax return, okay? Because remember, you are showing that you earn this much and they need to verify it. And the only way that they can verify it is on your tax return. So all your income that you say that you earn has to be reported on your taxes. So they're not necessarily going to look at the last 2 years of the average of last 2 years, but they will still verify that the income that you have earned is still being reported.
Right.
Good question.
Another question was, what will happen if I don't get a refund and will owe for my taxes? You want me to answer that one?
Sure.
So typically when you owe, what happens is that amount of money is due to the IRS, and your lender is going to want to see that you had attempted to pay the IRS. So what you can do is set it up on a payment plan. And what I tell a lot of my clients to do is to set it up on the least amount that you can pay. So if you can at least pay $25 a month or $50 a month, set it up on a payment plan for that. Your lender is going to want to see that you've made at least 3 payments towards that debt that you owe the IRS before you can qualify for a loan.
That's right.
That's pretty standard with all lenders.
That is right. Again, because they don't want you to owe taxes, right? Because then what becomes your collateral, their collateral? Your house, right? So yeah, so they would want you to make attempt to pay them, and like Audra said, it's like at least 3 payments. You don't have to pay the full amount, but at least 3 payments with a payment plan that you will continue to pay.
Yeah.
So a lot of times we say like you can't, especially with self-employment, you can't bake the cake and eat it too, right? You have to pay your taxes.
Yeah, it's no getting around it. I think a lot of people think that, they see so many people out here, somebody commented getting $10,000 back and all these large refunds, but realistically, those people are not going to be able to purchase a home because they're probably taking a ton of write-offs, barely reporting any income, because the tax system is made for individuals who maybe make a lower income to give them a credit back, or for our high net worth business owners so that they can reduce their tax liability. Tax code was really made for the entrepreneur. But when you want to purchase a home or get a business loan, you have to show your ability to pay. You have to show that you actually make the income and not that you're writing every piece of income off.
Good point. Good point. All right, everyone. Well, again, thank you so much for joining us today. And I thank you, Andrea, for joining me co-hosting this presentation. To everyone, our viewers, this webinar was recorded. In the case that you want to go back and re-watch it, if you want to share with friends and family that need to file their taxes or that need to learn how to file their taxes when qualifying for a mortgage, you could always send them over to our education calendar. We will probably next week, I'm pretty sure that we have more classes coming up in next month, so make sure that you check our calendar. We will be talking about taxes, property taxes, and then I believe we also have something going on with insurance. Okay, so make sure you check our calendar. Every month we usually host 2 to 3 classes per month. Okay, Andrea?
Okay, well, thank you so much for having me, Bland and Pericio. I truly appreciate the opportunity to share this information with your audience. Look forward to hopefully doing it again soon in the future. Hopefully all questions were answered.
Thank you so much, and you have a great one.
You too. Bye-bye.
Bye-bye.